Welcome to Inside Network's INBrief at the Income and Defensive Asset Symposium. My guest today is Charles Hamieh. Welcome, Charles.
Thanks, mate. Thank you.
Tell us a little bit about ClearBridge and its unique approach to infrastructure investing.
So the genesis of our approach has always been to take a long-dated private markets approach to looking at infrastructure assets and to applying those views in the listed market. And that's been the best way we've been able to achieve really strong, consistent outcomes and a really strong dividend growth.
And the majority of the audience today are advisors or
Yes.
asset consultants. So tell us what you see as the primary benefit of including infrastructure, listed infrastructure, into clients' portfolios.
So we think there's four primary benefits. Firstly, you have an asset class which is generating significant and predictable cash flows, which means very strong dividends and dividend growth well above inflation. As a function of that, you have an asset class which diversifies your portfolio almost immediately. And it's the nature of our diversification which is very important. You have very strong defensiveness in falling markets, but appropriate upside capture in rising markets. Thirdly, in this environment, most importantly, you do want to have some sort of inflation protection, and infrastructure is very unique in being able to hedge against that risk of rising inflation and the impact that has on investors' portfolios. And finally, we're seeing significant growth across the asset class. If you think about the policy goal of decarbonisation and what that means, as one example,
Sure.
Infrastructure and utilities is right at the forefront of delivering on that policy goal, and the listed companies that we invest in even more at the forefront of the capital expenditure required to make that happen.
Can you explain the inflation hedge comment? Why is infrastructure seen as an inflation hedge potentially? Or tell us about the relationship between inflation and infrastructure.
So most of the assets that we invest in are essential services, and by virtue of that, they're regulated assets, or they operate on the concession agreements. And embedded in that regulation or those concession agreements is the ability of the utility or the infrastructure company to pass through inflation. So the risk of rising inflation is borne by the user of the asset,
Sure.
and not the utility itself.
And I saw a private equity firm recently, and they had an infrastructure fund. There was nothing about infrastructure, so the definition and the realm of infrastructure has grown rapidly, and you must have seen it grow rapidly. Can you tell us where it starts and ends these days?
For us, it starts and ends in core infrastructure.
Yep.
And for us, it's about those regulated utilities, water, gas, electricity, distribution and transmission, very defensive asset classes, very low elasticity to economic outcomes. And
Still ownership of assets.
you're owning the real asset, and you're getting paid to make that asset available. But it's widened massively, everything from social infrastructure to competitive assets with volume risk and pricing risk to digital infrastructure. But for us, it's always been user pays assets and regulated utilities.
Great. Give us an example of one of your favourite holdings within your portfolio.
Well, I think one of the highest quality holdings in our portfolio is Exterior Energy, which is a US utility, or Exterior Energy Partners. And these companies, or both those companies, are in a very high quality portfolio of renewable energy assets with very long duration, very low counterparty risk, very strong financial position, and very low execution risk. And what that means is they're growing their cash flow and their asset base significantly, and that's translating very nicely into very strong dividends and very high dividend growth.
Well, I want to say thank you, Charles, and well done to ClearBridge. A really remarkable Australian story. You've been super successful over the past. Thanks for your time.
Thank you, mate.